Hello, everyone. This is your market update for Friday, October 17th, 2025. I'm going to start with this post here from Bob Coleman. It says gold and silver futures alert CME raised margin requirements on gold by 5.5% and silver futures by 8.5% effective today, Friday. So this is meant to dampen the speculation in gold and silver to kind of cool down the prices. We'll see if it has that effect. But right now, gold is still trading above 4,300. So over to this next chart here. This is gold with a 42-day rate of change. 42 trading days is about 2 months. So down here in the bottom panel, there's a horizontal red dashed line. Anytime that represents 25%. So anytime gold rises more than 25% in 2 months, you see these vertical dash lines. So right now we have achieved that in 2025. The last time we saw that, as I noted before, was in 2006. And then the time before that was in 1999, before the Y2K crisis. And then we had multiple events in the late 70s, 1979 and 1980. And the one here, the climax in 1980, actually got to about 120%. It's kind of hard to see here on the chart. In 2 months, gold rallied about 120%. And that was the final parabolic blow off top. On a personal note, I did not have my newsletter at the time, but in 2011, I was still heavily invested in gold and silver, and I missed the top completely. I thought we were going to see a similar parabolic blow off top like we had in 1980. We didn't get it. In 2011, we got just under 25%, but we never triggered a blow off top warning. And consequently, I missed the top in 2011 in gold and silver and had to ride that here for the last 14 years. But it's nice to see prices finally back on the move. And on another note, I think we're probably going to see maybe one or two more of these 25% plus moves here before this bull market ends. If we go over here to this is a weekly chart going back a long time. We look at the most recent bull market. We had the spike here in 2006 that I noted before. That was one of those 25% moves. 2008 didn't register, but we had basically during this multi-year breakout, we had three significant spikes. One in 2006, one in 2008, and then the final spike into 2011. Right now, we broke through a major resistance at 2000, and I don't think we're going to see prices ever trade below 2000 again, similar to when we broke out of this multi-year pattern. Prices broke through the 430 level and never to return again. So I think 2000 is forever behind us. And this is probably the first of many spikes. I think we'll probably see one more in 2027, maybe 2028, but probably 2027, and then maybe one more final spike into 2030. That's when I think we'll probably see the final blow off top to where prices reach my minimum $8,000 to $10,000 mark here. So, and that could be honestly conservative. Prices could exceed 10,000. So we'll just have to play it by year. But right now, I still think we have probably 4 or 5 more years of this bull market. But right now, we're going to have to digest this. So once this peak occurs here, probably soon, is my guess, we'll probably digest this for maybe a year before we break out and head higher again. I think the next stop will probably be around 6,500. Over to the current daily chart here. Gold futures currently trading at $4,318. The red line again represents the upper boundary of the gold cycle indicator that caps most moves, but every once in a while we get these parabolic rallies here, and then we turn to this purple line here. And once if we get above that, I think that would probably signal the end of this move here. And that level right now is $4,433. So I think we could exceed that level next week. And again, I'll be looking for a top here probably pretty soon. And then I think we could have a sharp correction. The last multiple intermediate degree corrections were actually just sideways churns, and we never got a really sharp pullback. I think this next one, we should see probably a minimum of a 20% correction before prices turn sideways. And then again, I think they'll probably break higher after maybe a 12-month to even 18-month consolidation. Over to silver, currently trading at $52.02. Kind of reversing here a little bit after the CME raised margin requirements. We'll see if this holds. Almost hit $54 here in futures. I think we could see a little more upside if gold continues to break through that 4,400 level next week. Silver could follow suit and maybe even reach near $60 before we see this pullback. If we look at the bigger chart here, silver, this goes back all the way to the late 1970s. And again, this is a 45-year cup with handle formation. And I don't know if you can see it on here, but we are officially breaking out finally right now. So my minimum target was around $180. That's basically the depth of this handle pattern. But I think the inflation adjusted high is 200. So I think we're probably going to see at least $200 here by the end of this decade, around 2030. But we could see significantly higher prices because every once in a while, silver will get one of those moves where it just kind of goes. And I mean, 300 is possible, and even I would not be surprised if we saw 400 or even $500 if we get another 1979, 1980 style blow off top. If you look at that, prices went from $3.83 in '76 up to $49.45. So we could get one of those moves here into 2030 for a blow off top. But right now, minimum target's 180, but I think 200 is probably likely. Platinum currently trading at $1,669. I don't know if they increased the margin requirements on platinum, but we're getting a pretty significant reversal candle here. We'll see if this holds. But all in all, platinum's kind of lagging here still. Need to get sustained closes, probably above 1800 to extend this. I think it'll catch up, but right now it just might not be the time for platinum. GDX finished up yesterday 3.65%. We did hit a high of $85.08, so we achieved that 4-year base target. And we're going to see what happens here in this nice tight channel. And as long as prices stay in this channel, we could see some more upside. Progressive closes below the lower channel boundary would support a top. And lastly, Bitcoin seeing some downside follow through. This 107 level is pretty critical, currently trading at 105,837. We'll see if this rebounds or not. Prices are trying to recover right now. But right now, I'd say there's probably a 70% probability that this is the cycle high, the 4-year cycle high, and that we are starting a new bear market. I would only grow more confident in that if this continues to break down over the next several days. Again, on the weekly chart, I'll be looking for progressive closes below the 50-week moving average, which is currently around 99,000. I was listening to I think a podcast with Michael Oliver from Momentum Structural Analysis, and he sees a setup in Bitcoin similar to 1987 in a momentum structure, and he thinks that that could lead to a sharp breakdown similar to what we saw in 1987 with the S&P 500 when it crashed 20 some percent, I think, in a day, and maybe over 30% in a week. So that is a possibility. I'm not giving it a high probability at this time, but I think if we see prices start to break down below that 100,000 level, October is supposed to be one of the best months, and that would be the opposite of what everyone expects. We already saw a massive washout of leveraged positions, and if this starts to break down below that 100,000 level, I think that could turn possibly into a waterfall decline, taking prices much lower than people expect in very short order. We have a lot of these treasury companies that have been accumulating Bitcoin on leverage. They've been borrowing money, selling shares to buy Bitcoin, and that 100,000 level I think is critical. And if we see a decisive breakdown below that, that could trigger multiple stops and perhaps a cascade of selling orders that could take prices much lower faster than anyone envisioned. So I'm keeping an eye on that, but right now we'll see if we can get a couple strong closes below that 107 level. That's it for now. Have yourself a wonderful weekend, and we'll talk to you later.